Welcome to the deep dive. Today we're digging into something pretty interesting. The latest financials from Palantir Technologies.
Yeah, we've got their Form 8K filing and the press release that came out May 5th, 2025. Lots to unpack.
Exactly. So our aim here is really just to cut through the noise,
Yeah.
get to the core of what these numbers mean for Palantir, maybe for the wider tech scene too.
Right. We want to give you the key takeaways without you having to wade through all the dense financial docs yourself.
So think of this as your essential briefing on Palantir's Q1.
Mm-hmm. And we're looking straight at the source materials here, the SEC filing, the press release.
Our mission then is to pull out the big financial highlights, figure out where the growth is really happening.
And get a sense of their own forecast for the rest of the year.
Mm-hmm.
Basically trying to see if Palantir's, turning that tech into solid commercial results.
Okay, let's jump in. Q1 2025 overall performance. What numbers first jumped out at you?
Well, the revenue growth is definitely the headline act. They pulled in $884 million.
$884 million, okay.
Which is up 39% compared to the same quarter last year. That's pretty significant.
39% year on year is definitely strong.
Yeah, and they also grew 7% just from the previous quarter, Q4. So momentum there too.
Makes you wonder what's really driving that.
Yeah.
But high growth is one thing.
Okay.
What about profitability? Does it follow?
Well, that's where it gets quite interesting, actually. Their gross profit was solid, $711 million.
Okay.
But then you look at GAAP income from operations, $176 million. That's a 20% margin.
20% cap out margin, not bad at all.
Right. And then the adjusted income from operations, that figure is $391 million.
Wow, okay.
Which works out to a 44% margin on an adjusted basis. That suggests the underlying business is, pretty profitable.
44% adjusted operating margin.
Yeah.
That's really quite remarkable in this space. How did that translate to the bottom line net income?
So GAAP net income landed at $214 million. That's a 24% margin.
24% GAAP net margin.
Okay. And they're generating serious cash, too. Cash from operations was $310 million. And adjusted free cash flow hit $370 million. That's 35% and 42% margin, respectively.
High cash flow margins.
Yeah. And earnings per share. $0.08 on a GAAP basis. $0.13 adjusted.
So looking at all those numbers, it seems like a pretty strong quarter financially, wouldn't you say?
Absolutely. Across the board, the metrics look quite healthy.
Okay, so that impressive growth,
That's right.
Let's break that down. Where's it coming from? What are the key drivers here?
A huge part of the story is definitely the U.S. Their total U.S. revenue shot up 55% year over year.
55% in the U.S. alone.
Yeah, hitting $628 million. But the standout number is U.S. commercial.
Ah, okay. What happened there?
That grew an incredible 71% year over year, 71%, pulled in $255 million.
Wow.
The CEO even flagged that this puts them over $1 billion annual run rate just in U.S. commercial.
$1 billion run rate. That's a major milestone. Suggests maybe their message is really landing with businesses now.
It certainly seems that way. I mean, that kind of growth in a core market like U.S. commercial, yeah, it suggests something significant is shifting.
Okay, so 71% U.S. commercial growth. What about the government side? That's historically been their bread and butter, right?
It's still very strong. U.S. government revenue also grew robustly 45% year over year.
45%.
Yeah, bringing in $373 million. So, both arms, commercial, and government within the U.S. are firing on all cylinders, it seems.
And is this just existing customers spending more, or are they actually bringing new logos, new clients into the fold?
Good question. They're doing both. Their overall customer count is up 39% compared to last year.
39% more customers.
And even up 8% just since the last quarter. Plus, they're closing some really chunky deals.
Like how big?
In Q1, they closed 139 deals worth $1 million or more.
Okay.
And within that, 51 deals were over $5 million. And 31 deals actually topped $10 million each.
Those are serious commitments. Big numbers.
Definitely. And looking beyond just the revenue book this quarter, there are some really strong indicators for future U.S. commercial business.
Oh, yeah.
Their U.S. commercial total contract value, or TCV, booked in the quarter hit a record. $810 million.
$810 million.
Up a massive 183% compared to Q1 last year. That figure really jumped out. It suggests a huge pipeline.
183% growth in TCV.
Yeah.
Yeah, that points to future revenue.
Exactly. And their remaining deal value, RDV, for U.S. commercial is now $2.32 billion,
Okay.
which is up 127% year over year, and maybe just as importantly, up 30% just from the end of last quarter.
So strong momentum carrying forward in that key segment.
Looks like it. Really good visibility into future work there.
All these impressive growth figures, profit margins. It brings us to that metric, the rule of 40. Can you quickly remind us what that is and how Palantir stacked up?
Sure. So the rule of 40 is basically a quick health check for software companies. You just add the revenue growth rate percentage
Right, the 39%.
to the adjusted operating margin percentage.
Which is 44%.
Exactly. So you add 39 and 44.
Okay, that gives us 83%.
83%. And the general idea is that anything over 40% is considered pretty healthy, showing a good balance between growth and profitability.
So 83%.
Oh.
They're not just healthy, they're like smashing that benchmark.
Yeah, it's a very strong score. It suggests they're managing both growth and efficiency really well right now.
Okay, so with Q1 looking this good and that rule of 40 score, what are they saying about the rest of 2025? Did they update their outlook?
They did, and they've definitely raised their expectations. For the full year, they're now guiding total revenue to between $3.890 billion and $3.902 billion.
Okay, and what does that represent in terms of growth?
That's about 36% year-over-year growth for the full year. Still very strong.
And what about that U.S. commercial segment they highlighted?
Yeah, they significantly boosted the guidance there. They now expect U.S. commercial revenue to be in excess of $1.178 billion.
In excess of?
Which translates to at least 68% growth year over year for that segment. So really doubling down on that momentum.
68% plus for U.S. commercial for the full year. Wow. What about profitability guidance? Did that get a bump too?
It did. Adjusted income from operations guidance is up, now between $1.711 and $1.723 billion.
Okay.
And adjusted free cash flow guidance is also raised to between $1.6 and $1.8 billion.
Significant numbers there.
And importantly, they reiterated that they still expect to deliver GAAP operating income and GAAP net income in every quarter this year.
So consistent profitability on a GAAP basis too. That's probably reassuring for investors who might have worried about that in the past.
Absolutely. Sustained GAAP profitability alongside this kind of growth is definitely noteworthy.
Now, the CEO, Alexander Karp, he usually has some interesting things to say. What was his take in the commentary?
He was pretty direct. Karp talked about being in the midst of a tectonic shift in how their software is being adopted.
A tectonic shift. Strong words.
Yeah, and he pointed specifically to that huge U.S. growth, the 55% overall figure.
Did he frame Palantir's role in the market? I know they have ambitious positioning.
He did. He essentially asserted that Palantir is, and I quote, delivering the operating system for the modern enterprise in the era of AI.
The OS for the enterprise in the AI era. Okay, that's definitely ambitious, setting a high bar.
It really underlines where they see themselves fitting into the whole AI transformation that businesses are going through.
Okay, and to support that growth and that ambition, what does their balance sheet look like? Do they have the resources?
They seem very well positioned. As of the end of March, they were sitting on $5.4 billion in cash equivalents and short-term U.S. treasuries.
$5.4 billion. That's a substantial cushion.
Yeah, a very healthy war chest. Gives them a lot of flexibility for R&D, sales expansion, maybe acquisitions, whatever they need.
Right. Now, you mentioned adjusted figures earlier, and Palantir relies quite a bit on these non-GAAP measures. Can you just briefly touch on why companies do this?
Sure. So Palantir, like a lot of tech firms, uses non-GAAP metrics because they believe it gives maybe a clearer view of the core underlying operational performance.
Kind of stripping out some of the noise.
Exactly. Things like stock-based compensation, which is a real expense, but non-cash and related payroll taxes, or maybe one-off items. They exclude these to show what they see as the ongoing profitability trend of the main business.
So it's meant to help investors track the core operational health over time.
That's the idea. They feel it provides a more consistent comparison period to period. But, and this is important, you always need to remember these are supplemental.
Right, not a replacement for GAAP.
Precisely. And Palantir does provide the full reconciliations back to GAAP in the press release, so you can see exactly how they get from one to the other. Transparency is key there.
Absolutely. And speaking of disclosures, any report looking forward comes with caveats, right? What about their forward-looking statements?
Yes, the standard but very important cautionary language is in there. You have to remember their outlook, their guidance. It's all based on current expectations.
And things can change.
Right. Lots of risks and uncertainties could make the actual results look different. Things like, can they actually execute on this growth?
Yeah.
Is the market demand going to stay strong? What about big macroeconomic shifts?
Mm.
Or even just challenges specific to AI development and deployment, which is core to their pitch now.
So basically, the positive outlook is great, but it's not guaranteed. External factors play a big role.
Exactly. And they clearly state these predictions are just their view as of May 5th, and they don't have an obligation to update them if things change down the line. So, keep that context in mind.
Good reminder. Okay, so for listeners who want to really dive even deeper, maybe read Karp's letter or see the presentation slides, where should they go?
Palantir puts all of this on their investor relations website, so that's investors.palantir.com. You'll find the full press release there, the CEO letter, the investor presentation. They also did an earnings webcast, and the replay should be available there too if you want to hear management discuss the results directly.
Perfect. So lots of material for those who want the full picture. All right, let's try and wrap this up. Key takeaways from this deep dive into Palantir's Q1 25.
I think the main story is undeniably strong performance. Revenue growth impressive, profitability improving, cash flow solid.
And specifically that U.S. commercial growth really standing out.
Yeah, that's the driver. That explosive growth led them to raise their full-year guidance significantly, especially for U.S. commercial revenue, but also for adjusted profit and free cash flow.
So the core message seems to be increased adoption, particularly among U.S. businesses, is translating into tangible financial success.
Exactly. The CEO's tectonic shift comment seems, backed up at least by these Q1 numbers, especially on the commercial front. It suggests real momentum.
Okay, so here's the final thought to leave you with. If this surge in U.S. commercial adoption is a sustainable trend, what does that really mean for Palantir's position in the competitive enterprise software market down the line? Is this the start of them becoming that operating system Karp talks about? And maybe more fundamentally, what's truly driving this shift now, and can they keep it going?
Those are definitely the big questions. Figuring out the why behind this U.S. commercial success and whether it lasts is going to be key to understanding Palantir's long-term story.
Definitely something to chew on. Well, thanks for taking this deep dive into Palantir's Q1 results with us today.
My pleasure.
And again, if you want to explore the source documents yourself, head over to Palantir's investor relations site. Until our next deep dive.